Welcome, welcome. So, calculating your risk. Let's get right into it. Why is it important? Let's talk about the 6 P's. What are they? Prior planning prevents piss poor performance. So, basically, a failure to plan, you're planning to fail. If you don't know what you're doing going into a trade, only bad things can happen. Why is calculating your risk so important? It lets you know exactly how much you're willing to lose on any given trade. And what it essentially does is it keeps your emotions out of your trading because you will have already pre-analyzed the market. You know exactly where your stops need to be. And if they are hit, then that means you no longer want to be in the trade anyway. So it helps you keep your emotions out of your trading because you know that, hey, if I'm wrong on this trade, I'm wrong on this trade. Now, what is it? It's simply calculating the distance from your entry to your stop loss to apply the correct lot size. Now, how do you do it? So if we go on TradingView, they have a tool. It's called the risk to reward tool. It's either the long position or the short position. I'm not sure in what category you can find it. I'm pretty sure it is right here. Long position, short position, right in this category. And what it does is it plots your trade on the chart for you. So you can calculate your risk and know the distance from your entry to your stop loss directly from TradingView. It tells you right in the pips. So if I say I want to go long and I want my stop loss to be here, I need my take profit to be somewhere right here. I know that I have a 148 pip stop loss and a 387 pip take profit if my entry is right here and my stop loss is right here. So that is how you do it. It will tell you the distance right there on the screen. Now, when do you do it? You do it before you enter every single trade. It doesn't matter. You calculate your risk before you enter into any trade. You want to know what the exact amount that you are risking on that trade every single time that you open a position. And here's a really cool trick. Where can you go to have it done for you? You can go to my FX book calculator, and they have a position size calculator on there. So if we are NZD CAD and we want to be long, just for the sake of argument, say we want to risk 50 pips. In order to make 200 pips, we can go on to 49.4. We can go on to here. We can see the currency pair. Go down to NZD CAD, amount currency USD. Say we have a $100,000 account. Say we want to risk 1%. Our stop loss in pips is 49.4, and now we want to calculate. So what it is telling us is that we use 2.6 lots, which is almost 260,000 units. And it will be $1,000 if our stop loss is 49.4 pips away from our entry. So that is where you can go to have it done for you. And if you made it this far, there is a tip. If we go on to TradingView, here is a quick way to calculate your risk. If you have MetaTrader 4 on your computer, you can go on to it and you can say, I want to get in this trade, but I don't know how much I want to risk. You can open a 0.01 test lot and you can line it up everything, use your tools, go ahead and set your stop loss, and then you can hover over your stop loss and it will tell you how much you're risking. So say for instance, you're risking $10 with that current position at a 0.01 lot size. You can do that. This is proportionate to X, which is the exact amount that you want to risk. So say you want to risk $100, what you'll do is you'll multiply that times your 0.01 and then you will divide it by 10 and that will give you your X. So you can do it that way. Now that we've gone over the what, when, where, why, how, and why, let's jump into a trade breakdown. We're going to be using multi-time frame analysis and structure the right way, which is the only way we know how here. So let's start on the monthly time frame. And what can we identify? Well, on the monthly time frame, we can identify that we've had an extreme bearish candle to the downside, but we've also had the next candle that has pushed up. So we've had a push up, push back down, and we still closed bullish. So what can we expect? Even though we've had a long wick left behind and we've had an extreme bearish candle, we can still expect some sort of push to the upside to come and try to fill in this candle, testing some of this previous resistance that was acted as support, which should act as resistance, and it's currently acting as resistance right now. So even though we are pushing to the downside, we can expect a retracement on this market because the market can't move in one direction forever, and that's on the monthly time frame. On the weekly, what can we identify? On the weekly, we can see that we have failed to break below this area. We've came down, found structural support in this area, we've tested it, bounced from this area, came back once again, and we've thus bounced from this area once again, creating what would be a double bottom, a failure to break and continue this impulse retracement and impulse phase on this market. So what can we expect on this market as well? We can expect some sort of push to come and retest this previous structure resistance, now turned resistance again, if it does happen to come in this area. So we've had structure resistance all in here. Every time it's came in this area, it's continued to the downside. If it does come back in this area, we can expect that once again. So we would like to see more bullishness on this market, even though it isn't the stronger phase, it does have to correct itself. Now, if we drop down on the daily, keeping our charts clean, what can we see? We see that we have a nice move to the downside. All these candles pushing all the way down. Now we're starting to have some consolidation. We can only expect some sort of retracement back into this area. So where would this likely be stopped at before it does continue to the downside? We've had this structure resistance in this area, which kind of looks something similar to this. You know where I'm going from here, and we can expect that this left shoulder head and a right shoulder to be completed here in order for us to continue to the downside, and that is on the daily. But before we would like to see that, we need to see the market push in this area. So we are still expecting some more bullishness on this market. If we drop down to the 4 hour, just analyzing this market, didn't mean to go that far. What can we expect on this market as well? If we drop down to the 4 hour, what can we expect on this market? You can see that we have just closed above previous structure support. So we tapped into it, created some sort of structure support, we broke below it, and we have immediately broke back above the structure. So we created some sort of head in this area as well. And then what you would like to see is the market come retest this structure, now turned support. Was support over here, broken, used as resistance with this wick, then market broke above it, and now is used as structure support once again. So we'd like to see continuation on this market, at least to come retest some of this area in here. We would like to see the market come retest this area in here, which would be the completion of the left shoulder head and right shoulder. I know that's a lot, throwing a lot at you really fast, but trying to get it all done. So if we do drop down on the hour, what can we identify on the hour? If we do try to keep the charts clean, let's get rid of this right here, already drawn out. You see that we've had structure support. The market came down in this area. It did find support once again, bounce again from this area, and then never came and retested it once again. Well, the market is doing that same pattern right here. The market started to retrace, found support, came back, retested this, and this bullish candle is starting to indicate that this market is failing to break lower on this structure support now found. So what we like to do, let's start to look for an entry to the upside. Now what can we identify throughout this market? We can see that on the 15 minute, we've been in a bearish trend up until now that we've broken above this structure. Now we are making higher highs, and what we would expect is a higher low to be created and then more break of structure on its way up. So let's play it forward. If we've identified our entry in this area, we have a stops below the low, risking a nice 2-to-1 risk to reward, just risking for a higher high because this is the most common pattern in the market. You'd like to see some sort of impulse to the upside and then a retracement, even though the retracement came back down here, and then a higher high created. It is the most common pattern in the market. You're taking advantage of it. So let's see how it plays out. Play it forward. Oh, you thought you was gonna get away with it. Let's run it back. So as you can see at 518 NZD CAD, just how we had planned it set out, 0.8811. Yeah, they thought they was gonna get away with it. So let's see where we got our stuff. 0.8811 right here at 518 on this candle. We did have this signal sent out like this right here. So we entered into this market right here, a little foreshadowing right here, just a little exposure, how we get down over here. But yeah, into this market, triggered into this market. Let's see how it plays out. In a bit of drawdown, we've had this structure support that was broken that we want to see it used, or structure resistance over here, but structure support that we want to see used right in this area. In order for us to continue to the upside, we start to get the break to the upside, and then the market just explodes away from our entry. We're already risk free, and then as you can see, a nice 24.8 pips, 2-to-1 risk to reward. Target was met. So that is it. You need to calculate your risk beforehand. So I figured out that before I took this trade that this was 12.3 pips away. I typed in everything, 1% of my account, and figured the correct lot size before I entered into this trade. And then it does gave me a 2-to-1 risk to reward on exactly what I wanted to risk. So my risk was double. I made exactly 2.02 of what I risked. Thus is the story. I knew exactly what I was risking, and I was willing to lose that, but I ended up making 2 times that. And I did that with all the strategies that are offered in my program. Program is open. If you want to join it, go ahead. But other than that, drop a like, make sure you're subscribed with the post notifications turned on if you would like to, and hope you have a profitable day on and off the charts. Until next time, I holla.